Hey traders, it's the trader tip of the week, and this morning I want to talk about what's going on with the markets. We've seen a strong rally off the Fed, followed by some all-time highs on the SP 500. Now we have dropped back down to make some lower lows here in the markets. The SP 500 is still holding up from the lows that we saw a few weeks ago, but overall the Nasdaq, if we were to take a look over at that, we are seeing the Nasdaq trade sharply lower this morning, poking to some nominal new lows, and that's what Fibonacci theory. The market is always searching for a lower low or a higher high, and that's what can create these market bottoms. Now, we saw a pretty big move off the FOMC meeting to the upside. The market's rallied up. As you can see, there's a lot of highs through these on this daily chart here. And more or less, there was a lot of put option. If we were to go back and take a look at the total put call ratio, and we zoom back in time here, we saw a really high level of the put call ratio, something that really hadn't seen since the COVID crash. So what that is telling us is everyone is buying put options, expecting the markets to go lower, and that means the market needs to fall for those options to become valuable to those traders. Now, Friday was triple witching day. And of course, the SP 500 hit all-time highs the day before and the morning of, and then the market sold off and reversed to the downside. And the institutions like to, make money on their options. So the market can be very volatile on triple witching day. It can be one of the most volatile, consistently volatile days of the year when we have this happen. The last 7 triple witching days have all been to the downside with extra volatility, and that's what we've seen. And now the market's flushing down. Friday was triple witching day here, and we've got some continued fear this morning. It was a pretty negative, scary day for the majority of traders. Stocks are set to gap sharply lower today, and that is actually what we want to see from a bullish standpoint. We're going to see a big gap down on the chart. If we were to look at the 30-minute chart, we are technically still in a short-term uptrend. We're going to have a gap down. Gaps tend to get filled, which means we could see this gap today as an exhaustion move to the downside, followed by a strong rally eventually, and a big move to the upside for the holiday rally. There's still 9-10 trading sessions left of the year. Seasonality-wise, this is the strongest time of the year for that to happen. We have just had big news. We've had triple witching. We've had volatility. We're going to have the VIX up 20% today. There's going to be panic selling on the New York Stock Exchange. We got a gap down. All these things are coming down to tell us that, hey, this should be a bottoming, hopefully, week here in the market, potentially today, and we'll see where things go. But definitely the market continues to be in a bull market. It's holding up near support, at support, and all the signs are there that most people are panicking out, and that happens right at a market low. And from there, it should be off to the races. So keep your eyes peeled for a move higher going forward, and we'll talk to you soon. Bye-bye.